and welcome to Startup Street. I'm Ritu Singh and with me is Arundhati Ramanan. Here are the key headlines from the startup space. MobiKwik's 572 crore rupee IPO is fully subscribed within an hour of the issue opening. The fintech giant had cut its issue size by 70% in the run-up to the IPO. The top management tells CNBC-TV18 they reduced the issue size as they had scaled up substantially in revenues.
Quick commerce platform Zepto to spin off Zepto Cafe business into a separate app to launch new app next week. Co-founder Adit Palicha says in a tweet that Cafe is scaling rapidly, launching 100 plus cafes a month and already clocking 30,000 orders per day.
Swiggy tumbles in trade amid profit booking after the end of the mandatory lock-in period. As many as 6.5 crore shares became eligible for trade today. Shares of the food aggregator have surged nearly 25% since its listing last month.
Co-working space company Office soars over 6% after a big block deal. CNBC-TV18 learns from sources that Peak 15, BISC and Link Investment Trust are likely to have offloaded around 12% stake in the firm for a little over 583 crore rupees.
And a report by Kalari Capital lays bare the gender bias in startup funding. Only 16% of all the capital raised is allocated to startups with women co-founders, and just 8% of startups are run by female CEOs. So those are the headlines that we're tracking for you today on Startup Street. Let's start with our top story, where the 572 crore rupee initial public offering of one MobiKwik was fully subscribed within an hour of the issue's opening. This was largely driven by the retail portion, followed by the non-institutional investors. The company's public issue is entirely a fresh issuance of equity shares with no offer for sale component. Now, speaking to CNBC-TV18, one MobiKwik's management said the IPO size was reduced as the company scaled up substantially in revenues. Remember, the fintech giant had gradually cut its issue size by 70% in the run-up to this IPO.
MobiKwik last year has achieved 890 crores of scale, despite this capital working against us, and not just achieved that growth, but also became profitable, both at an EBITDA and PAT level, which none of our competitors, none of the peer set has ever done, even for a single quarter. MobiKwik has two businesses. One is the payments business, for which we have shown strong traction, strong growth last year, and in fact for the last 3 years, and even for the first quarter.
On what's brewing, Haber, an industrial AI startup, has secured $44 million in a Series C funding round led by Creages, bNext and Axel. Now, the company plans to expand its operations globally with a key focus on the Americas. The round included $38 million in equity and $5 million in debt. Founded in 2017, Haber provides automated solutions across pulp, paper and packaging industries to its clients in India, Middle East and Africa. It claims to have nearly doubled its revenue from key customers in the past year, all while maintaining a zero churn rate. For more on this, joining me now is Vipin Raghavan, the co-founder and CEO of Haber. Vipin, thank you so much for taking time out and being here on Startup Street with us. Congratulations on raising these funds. But, first up, how will the $44 million in the Series C funding be strategically deployed to achieve your expansion goals, especially in the Americas?
Arundhati, thanks for having me on, and thanks for recognizing our fundraise. So we're going to double down on the things that have worked really well for us. So that's product engineering, R&D, and going to new markets. So we used to be a single product company up until 2 years ago. Today, we have 3 products and the opportunity to cross-sell new products to an existing captive customer base. We used to be only in the Indian market. Today, like you rightly said, we are in Middle East and Africa as well. And just this year, we have launched in the American market. So the North American market will be a huge focus, and a continued focus on product and engineering. We'll double down in those areas.
So doubling down on everything that's currently working for you is what you're saying. But, you currently have 100 plus clients in India, Middle East and Africa, right? Are there other geographies that you hope to expand into? Obviously, America, like you just said. So, but apart from the Americas, what else is looking exciting for you?
See, the trends that are pushing demand for AI in the industrial space, those remain true across the world. So if you look at operators who run these factories, before the pandemic, the average tenure of an operator used to be 20 years. Today, it's in the low single digits, right? the raw materials are becoming more scarce, and the different kinds of products that they have to make, that's becoming more and more challenging, right? So they have to deal with ever-changing demands from their end markets, very difficult raw materials, and they have to do this with operators who are even less experienced. So what we are essentially doing for our customers is making the junior operator perform like a very senior resource, right? And these things hold true across the world, right? Especially in the Western markets where talent scarcity is a huge problem. Right now we have planted a flag in the North American market, but we'll go across to Latin America as well, and then eventually the European and the Far East Asian markets.
All right, so Latin America, Europe and Far East Asian markets also on your radar. You've also claimed to have doubled your revenues in the past year, right? If you could sort of give us a sense of where they currently stand and at what pace are they growing across the solutions that you offer, which was 1 initially and now 3, right? So if you could take us through what the bottom line looks like and the expected growth trajectory there.
Sure. So if you look at last 12 months, right, half of our growth has come from existing customers. So not just selling new products to existing customers, but going to every single production line that they have, right? And many of these customers have multiple production sites as well. So we land on one production line in one site, and from there we go to other production sites, right? So that's one way we can expand with one product, and then introducing newer products to the same customer. So half of our growth, like I said, has come from the same group of customers, and I expect that to stay true for the foreseeable future. We'll continue to expand with our current customer base while adding new logos. So in terms of logo expansion, right, we have hardly scratched the surface there. In the markets that we're in today, India, yes, we have close to 20% logo share, but still a long way to go before we have substantial market share. Middle East, Africa, a lot of headroom to grow there. A lot of greenfield activity happening in this space as well, right? So most of our customers are in the packaging, paper, pulp space, and this demand for those products coming from quick commerce, coming from food delivery. So we're seeing our customers add more production lines, increase capacity, and we're seeing new players come into the space as well. So that is ever increasing the market that we can go to, right? So those are the places that we expect growth to come from.
So where are the revenues at currently, and what's the target for this year?
Yeah, so we are sort of in that $20 million run rate. Annual recurring revenue is how we measure our revenue run rate. So we've crossed that metric. And we expect to at least add another 30-40% before the end of the Indian financial year, which is March.
Right. So, we're running out of time. So in 30 seconds, if you could tell us, what are the biggest opportunities and challenges that you anticipate as you expand into all of these new geographies, especially the Americas?
So the same challenges that our customers are facing, talent scarcity will also be a big challenge for us. So, finding top-notch talent, whether it's here or in the US, continues to be a challenge, right? So fortunately, we've been able to be better at retaining the talent that we have. So we don't need to go find new talent to replace people who are leaving. So that retention metric is very high for us on talent. So, but we have to expand our talent base, right? So to go to these markets to kind of support the go lives and the customer successes. So building out the team, that's I think going to continue to be the biggest challenge for us.
Right. So talent and building out the team, that's what the challenge is going to be in the foreseeable future. All right, Vipin, thank you so much for joining us on the show today and outlining your growth plans. We wish you all the best as well going forward.
Thanks, Arundhati.
All right, moving on. India is seeing a big quick commerce boom, with the sector growing at a compounded rate of 50 to 70% currently, and it is expected to keep pace with about 50% growth in the next 3 years. That's the word coming in from BigBasket co-founder Vipul Parekh. In a conversation with my colleague Shilpa Ranipeta, he added that the company, which has shifted entirely to quick commerce, is also looking at several new categories, including pharmacy. Take a look.
Thank you so much for your time. I wanted to get a sense from you after entering the quick commerce space. What's the kind of growth that you've been seeing currently? If you could just run us through, few quick stats on what the kind of daily orders that you're clocking. What's the average AOV like at the moment?
I think we've seen significant growth in quick commerce. We launched quick commerce about 2.5 years back. It's now that we moved our entire model to quick commerce now, and so we are completely quick commerce. It's not that we have abandoned slotted delivery. We actually have slotted delivery. People can take that as a feature. So we do both. But our primary default delivery now is quick commerce. And the kind of growth that we are seeing in quick commerce over the last 2 years has been just immense. Last year was about 100% for the category itself. This year, I think quick commerce will grow by 50 to 70%.
In terms of category expansion, now consumer expectations have changed. They don't want just grocery, they want everything. So what are you looking at in terms of newer categories that you're adding? And do you see that as a result, the lines blurring between quick commerce and e-commerce?
Yeah, there are, at the lower end, in high velocity products, I think the lines are blurring. So whether it's small electronics or mobile phones or, festival shopping, things like coins in, gold coins in Diwali or kites in, Sankranti, I think those categories are coming to quick commerce.
Right.
So a lot of these categories which were traditionally with quick commerce, e-commerce have now moved to quick commerce. I think all quick commerce players are experimenting and trying to figure out what are the other products that you can add on. So a lot of experiments are going on whether pharmacy can come in. We are going to try pharmacy, so are a lot of other players. And we'll see if that actually prescription pharmacy or general pharmacy actually comes to quick commerce. And I think this kind of experimentation, whether low value fashion will come in. So I think quick commerce players today, I think people are doing, take chappals for example. We are selling chappals today. We are selling shoes. We are selling festival attire. So you will find this kind of experimentation going on. And since there's a lot of new categories coming on, I'm not too sure whether every one of them will work. But over the next couple of years, we'll figure out which ones work.
Rising Rajasthan, a 3-day investor summit took place in Jaipur and saw participation from some of the biggest names in the industry. CarDekho founder Amit Jain spoke to CNBC-TV18's Rachna Dhanrajani on the sidelines of the investor summit. He spoke about his journey starting from Rajasthan to the much-awaited IPO of the company. Take a look.
But what are the challenges that you faced from?
I think the biggest challenge we faced was talent because there were no IT companies, so we had to work hard. I am a coder. My brother Anurag, co-founder, is a coder. We actually used to train freshers to do coding, and that's how we built the company. So the biggest problem was talent, and I think that is largely got solved now. There are so many people who would do engineering from our people born out of Jaipur who go to IITs or local engineering colleges. I think they have started to come back now as an ecosystem.
You recently reported a 54% jump in your profits.
Yeah.
What's the outlook going forward?
Look, we are going to grow this year also by 50% almost as a group. And I think there's a power in compounding and we are observing that every year. एक अगर strong foundation बनाओ ना तो उसमें इमारत पे मंजिल लगाना आसान हो जाता है. I think that's what's happening. We are seeing a phenomenal growth and looking forward to a terrific year also.
Right, but you're also looking forward to an IPO. There's a 4,000 crore IPO in the offing is what we hear. What's the update on that?
I think I'm not allowed to comment right now on that, but we are planning.
Timeline of it?
No timeline commitment here. We are planning for that.
On that note, it is time for us to head into a short break. But coming up next, a report by Kalari Capital lays bare the gender bias in startup funding. Only 16% of all the capital raised is allocated to startups with women co-founders. Just 8% of startups are run by female CEOs. A special discussion on the other side. Stay tuned.
Kalari Capital's latest CXXO State of the Female Entrepreneurship in India report says that between January 2022 and October this year, only 16% of all the capital raised was allocated to startups with women co-founders. Just 8% of the startups are now led by female CEOs. Adds that startups co-founded by women consistently receive smaller check sizes, approximately half the average received by their male-led ventures. A separate report by Kalari, which is the India Alpha report, also adds India is poised to become a $7.5 trillion economy by 2030, and that India's startups will drive about $100 billion plus of that GDP growth. For more on the findings of both these reports, I have with me Vani Kola, the MD of Kalari Capital. Vani, thanks very much for your time here on CNBC-TV18. Let's start with that, surprising highlight. Only 16% of all the capital going to women-led startups. What actionable strategies can the ecosystem adopt to close this funding gap more quickly?
I think like the CXXO Summit, No Ceiling Summit we did yesterday, to inspire more women to be able to engage in entrepreneurship. So awareness and inspiration is very important to kind of improve the funnel, right? And then after that, number two, we need conversations on where are the biases to not have such access to funding to women. And I think that's something all investment firms must reflect, internally engage to improve their deal flow and improve their commitment to fund women, even if it is at a seed capital, which is what we have done with the CXXO fund. And obviously, Kalari isn't the only one doing it, but as each of us collectively engage in increasing the funnel by improving awareness and by committing to fund and mentor, I think that's the way we accelerate and create this compounding of women entrepreneurship. Lastly, I think we have to do more, which I know CNBC is doing, Kalari is doing, many others are doing, is to create that networks and opportunity, which is a shortcoming for a lot of women because investors tend to meet people from their known pools and source founders from that. So we have to kind of increase that network density for women entrepreneurs.
Well, yes, a lot more needs to be done, but the report also says only 13% of active angel investors in India are women, just 6% hold leadership positions in VC firms. Tell our viewers how important it is to bring more women into decision-making rules, and what are you at Kalari doing to address this?
So we start from our fellowship program, where purposefully we try to increase the cohort at the entry level of the firm. Because you can't create women in leadership without actually solving the problem at the entry level. And so very deliberately, I think we focus and invite women to consider a career in a venture capital firm. Today, the problem of having too few women in senior investment leadership role comes from the fact that in this nascent industry, which is a decade and a half, but still is a nascent industry, there haven't been enough women that have come in at the entry level and have grown from that into senior leadership roles. So I think just creating that role modeling, commending that, and increasing the pool of women that come into investment roles, I think is very, very important. And that's something we should all think about. How many analysts, associates, principals do we have before we talk about how many general partners and managing directors we have? And for angels also, I think there are a lot of women in financial services, but in the private investment space of angel, we don't see that happening. And I think that's also because angel pooling networks to be able to invest into technology, that those platforms are sorely missing.
Well, Vani, let's also talk about the positive coming from the report, the 1.41 times growth in female-led startups from Tier 2 and beyond cities. What are the critical drivers behind this trend you're seeing, and how can policy and private initiatives accelerate it further?
Yeah, Ritu, that was also surprising positively for me also. And I can't claim that I know all the reasons why that is. We have the data, which is actually great. And I wonder if it is because today business has become more democratized, right? We have hybrid work. We have e-commerce platforms. We have UPI, we have many things. And then also the rise in India consumer consumption and the rise of sort of digital brands, I think are some of the factors to why your location doesn't become a hindrance for you to be in business. So, and in fact, I think this is an early lead indicator of the entrepreneurship potential of Bharat, so to speak, because we have talked about 4 or 5 metros all the time where the pockets of entrepreneurship exist. But I think what we all can unlock and is anyway going to get unlocked with or without us is what is going to come out of tier 2. So I think over the next decade, we'll see more of our unicorns, more of the founder leadership, more of the female founders also emerge from tier 2 cities. And we have to sort of not assume they will come to Bangalore. I think I'm in Bangalore, but that we have to go there and create, access and networks to find them and invest in them.
Well, yes, the Bharat opportunity we keep talking about here. But Vani, let's talk about your other report, the India Alpha report that says India will be a $7.5 trillion economy by 2030, $30 trillion by 2047, and startups will contribute $100 billion. What are the key reforms or investments from a startup point of view that are essential to achieve these kind of milestones?
There is a role to do in creating that incubation of funds itself, which I think we need to continue and accelerate from what the policy and the government can do. And from a policy perspective, I think, enabling investment into the country as a active encouragement, I think is important. And IBCA and others provide that bridge, but there is always things that come up as a bit of a surprise. And I think in, from gray zones of regulation, and the gray zone is usually a bit of a challenge. So I think creating more engagement in policy making and industry to continue to accelerate the thriving of this community, I think is very important. I also think that providing funding mechanisms thoughtfully to create more inclusivity, which I think some of the state funds are already doing. I think we have to create pockets of excellence and incubate and develop that, whether it's deep tech, whether it's agri-tech and so on and so forth, because the opportunity for India is not just to build for India, but to build for the world.
Well, Vani, also this shift that your report talks about, building for Bharat to building for the world from Bharat. What are the sectors and innovations that shine in this area?
I do think that there is a unique opportunity in a moment in time, and India has always looked at manufacturing as a sector, but we haven't led it. And in order to create more economic equity, we have to kind of be able to do that. I think we have a moment in history that we can do it, and I see early signs of investment and commitment to build that. And coming to technology, I think what we will see over the next decade, I always think Apple iPhone was introduced in 2007. That wasn't that long ago, and it radically changed social demographics of how we live, how we eat, how we engage, how we entertain. And I think we know that a even more rapid aspect of that, social change is going to happen because of hardware, because of AI, because of space technologies. The confluence of all those three in what it does from compute, data processing, and real-time engagement of our lifestyles will change in the next decade dramatically in ways that today we can't fully predict. But what we can do is truly engage in it.
Well, thanks for sharing those insights, Vani. But before we let you go, quick word on the trends that you see shaping up in early stage investments in 2025, the sectors or the themes that look promising, the kind of exits Kalari has in the pipeline, and how much capital you're looking to deploy.
2025 will be a continued validation of private equity investment, creating extraordinary returns as an asset class, right? So far, we know what the public markets can do, and India is largely familiar. But I think the private markets which have always been a bit of a black box. But I think we are seeing a lot more companies go IPO. I expect next year for venture funded companies to be a phenomenal year from going public, and that and the validation of that long illiquid investment cycle will drive more capital into venture capital. In fact, more domestic capital, which I think is always a healthy sign. So I see that happening in 2025 and beyond. And I see many more companies aspiring in the India to global space, which is technology and SaaS, and also consumer trending in India from consumer brand and commerce enablement, the digital commerce enablement. I see tremendous innovation happening, and I hope we get to solving sectors like healthcare and edtech, which have been start-stop from really providing technology advantages. But whether it happens in 25 or beyond, I think those are hard problems that is ahead of us to crack, and only through technology we can truly solve for it.
Well, Vani, thanks very much for your time here on CNBC-TV18. It's always a pleasure. On that note, we're going to wrap up this edition of Startup Street. Thanks very much for watching, but stay with us. More news and updates will come up on the other side.